The Building Permits Index is a leading indicator of economic activity in the construction industry. It measures the number of building permits issued by local governments for new construction projects, such as residential and commercial buildings. The index is considered to be a reliable predictor of future economic activity, as it provides insight into the level of demand for construction projects and the overall health of the construction industry. Additionally, the index can be used to predict stock market returns, as changes in the construction industry can have a significant impact on the performance of the broader economy and the stock market. One of the key reasons that the Building Permits Index can be used to predict stock market returns is that the construction industry is an important driver of economic growth. When the construction industry is growing, it can lead to increased employment, higher wages, and increased consumer spending, all of which can benefit companies and lead to higher stock prices. Conversely, when the construction industry is contracting, it can lead to layoffs, lower wages, and reduced consumer spending, which can hurt companies and lead to lower stock prices. There are several other factors that can influence the relationship between the Building Permits Index and stock market returns. For example, the impact of the index on stock market returns can be affected by interest rates. When interest rates are low, it can make stocks more attractive to investors, which can lead to higher stock prices even in the absence of strong construction activity. Conversely, when interest rates are high, it can make stocks less attractive to investors, which can lead to lower stock prices even in the presence of strong construction activity. Another factor that can influence the relationship between the Building Permits Index and stock market returns is the level of government policies. For example, if the government implements policies that are perceived to be pro-growth and supportive of the construction industry, it can lead to higher construction activity and higher stock prices. Conversely, if the government implements policies that are perceived to be anti-growth or harmful to the construction industry, it can lead to lower construction activity and lower stock prices. It's worth noting that the relationship between the Building Permits Index and stock market returns is not always straightforward. There are times when the stock market may not react positively to strong construction activity. For example, the stock market may already be priced for strong construction activity, in which case the positive impact of the index on stock prices may be limited. Additionally, there may be other factors at play that can influence stock market returns, such as geopolitical tensions, global trade policies, and company-specific factors. In conclusion, the Building Permits Index is an important leading indicator of stock market returns. When the construction industry is growing, it can lead to increased employment, higher wages, and increased consumer spending, all of which can benefit companies and lead to higher stock prices. However, the relationship between the index and stock market returns can be influenced by a variety of factors, such as interest rates, government policies, and other market-specific factors. As such, it's always important to consider a variety of factors when making investment decisions.